Hello friends, welcome to my channel and thanks for watching this video. Friends, as we have ended with one more good week, I would say, in the Wall Street. People may call it as a correction week, but it is a good week and it is a pause after a big move that we have seen in the US market for the last 2 or 3 weeks, and that's giving the market a little bit pause, and it is preparing itself for a new move after some sort of short term correction and consolidation. So with this, let us start another session of our USA weekly report series, and in this one we will definitely discuss about lots of charts and the important headlines that has actually made an impact not only in the stock market but in economic sense as well. So let's start discussing all of them one by one, but before that, if you haven't yet subscribed my channel yet, just hit on the subscription button, also hit on the notification bell along with the all button to get my updated video notification. The first news, as you can see, that now finally the UK government has started making some right moves where they are now putting taxes, and they are cutting all the subsidies or some of the subsidies which will help the currency and also help their budget. So I mean, it's a pill that everyone has to take whenever you are living in a democracy. So as you can see, Brits faces sharpest fall in living standard on record as government tighten its belt. Okay, apart from that, I don't want to go into this kind of pipe leaks, or because blaming somebody when you do not have any proof does not make any sense. Apart from that, let us see. I hope this Russia Ukraine gets solved as soon as possible, because being an exporting countries, if this is the current status which we have here, not only causing problems for your own countrymen but to the people as well across the globe where you are exporting your products and services, goods or services. Commerce Bank chief says he is not preparing for a disaster, sees a mild recession. That we will see. I can't say that this bank is making mild recession. This bank is saying big recession. Any institution is saying we are already in recession. We will get to know once we are there. So we will get to know about the impact of the recession once when we are into the recession or when we are out of the recession. Then we get to know the complete impact. That's what my personal thinking is. Okay, because these banks and institutions have much more resources than I do. Okay, their resources, their knowledge, everything is way on top. But these kind of things, this is like smoke in the air. You cannot catch the smoke. That's why the previous experiences comes into the picture, where some are saying this is a big recession, some are saying this is a short term recession, but at the end of the day it perceives, or it carries a different meaning for a different individual. If you are a stock market guy, you will love recession, because that's where you will get prices at the cheaper rate, and that's where the policies, the central bank policies and the companies will take decision which will be best for the stockholders and not for the end users. At the same time, when the situation reverses, you can see stock market started correcting down, and the people in the economy are gaining benefit out of it. I mean, in terms of salary hikes, in terms of lower cost for products and services. So each and every has their own cycle. So you cannot decide what is the recession, what is the impact of it, and whom you are talking to. You will definitely get different kind of opinions. Dow jumps 150 points. We will talk about that. One on day on 100 on every 100 points up and down, you will see that market is fearing rate hike. When it is down and 100 point up, market is shaking of the higher rate fears. These kind of I don't know how much uh, relevant these kind of headlines are, so just ignore them. We will get to know. Let's see. JP Morgan says these global travel stocks, this is a pro, so I can't open it. Their top picks as China eases COVID restriction. So maybe a good thing, and if we find peace in global order, obviously the tourism market has been a laggard, not only for a specific country but across the globe. So apart from that, crypto startup Ripple is seeking a license in Ireland to drive EU expansion. Now, this segment of the financial market is completely different, because now people started shaking off. People literally started shaking off. It's not about, or not only about the money, but they are getting, the individuals or the investors are getting shaked off, and when the people who made the most out of it, and now uh, having seen that the kind of damage they have faced in their wealth, it's phenomenal. And obviously, so see, understand this thing, I want to include a very important point over here, because money is like water, it will always find ways. And if you keep on, and that's why even in equity market or stock market, those who are thinking for 20-25 years, that's a different thing. But even in stock market or equity market, you will see money is flowing from one stock to another stock. When suddenly a stock popped up very much in a very short amount of time, you will see smart money started you know they are exiting, and they will find their own ways into different sort of stocks. So it's been happening time and time again, but it's the core, it's always the core, whether the business, because if the business is strong, money will come back into it once the valuation settles down, or once the euphoria of stock price movement on the upside settle down after a big correction, it will get its mojo back. But this is completely a different thing. So if you are somebody who is definitely or only into the crypto, I know you are much more or you have much more information than I do, obviously, if you are only in crypto. But be aware of these kind of facts. It's not only about whether you understand the technology that the particular blockchain or the set of blockchains are using. It's not about the technology. At the end of the day, if you want to make money out of it, you need to understand the money behavior and not the technology, because the best of the best companies are also there in stock market. They are not doing anything for the past 5 or 10 years. Okay, their business are very good, they have good cash flows, but still they are not making. But one thing is sure, because they are productive assets, so they will give something in terms of dividend, in terms of bonus share, something. But here things are completely different. So understanding a technology is good. It's good if you are a company, it's good if you want to seek a job based on that technology. But when it comes to making money out of that technology, that's something different. Okay, so please understand these things. Apart from that, ECB may have to restrict growth to control inflation. So let us see how far they will go. Obviously, the US Fed has already started, and the posture that they have taken is quite hawkish as of now. But we have to see, because right now the balance is there, where the growth and the inflation keeps on moving up, which means people have money to spend. But if the rate of or if the pace of the interest rate hike continues going forward, there will be a time when the inflation suddenly shocks everybody and it will dip from 8% to 1 or 2%. Okay, because beyond a certain point there will be no one who is going to spend. So there will be some month or the other where you will see a big crash, and that's when the stock market started rejoicing big. So we will see. Let the music chair game continues. We will have to see who will win at the end of the day. Okay, obviously central bank does have the upper hand. They are the one who are responsible for money supply, not the end individual. But this is a game which goes much longer than anybody can think. Apart from that, I think this is the most of it. Yeah. Fed Collins expresses hope that inflation can be tamed without hitting jobs. That is anybody's guess, because we have seen the top of the companies have already said that they are going to cut their job forces by 5%, 10%, 15%, and this is very big in absolute number. So making such statements, I don't know how much relevant they are. If you are talking about low end jobs where people are working in restaurant or in some low end of the range, then it's a different thing. But people who are earning money, good money, and they are losing their jobs, then obviously hitting on the higher end of the chain will definitely have a big impact towards the lower end of the chain, and that is something nobody can control. When you started shaking something, it doesn't matter whether you are holding that particular thing in the middle or at the top or at the end. Sooner or later everything will start shaking off. So the impact will come, maybe simultaneously, maybe a bit later, but it will come. Now let's go to our important section, or the main section, where we can see the Friday close for this week is good for Dow Jones, for Nasdaq, and for S&P 500, and all of them are green. Gold is closed at 1752, which means it falls down by 11 points. Then we have oil, which is now trading at 80.11. The US 10-year yield at 3.82. The Euro USD, and then the VIX. The good thing about the VIX is it is trading in between 22 and 23 and a half. 23 and a half. Once we want it to go below 20, that would be great for stock market, because that's where you can see very stable moves. The volatility will reduce further, and if it started moving above 25 VIX, then obviously we will have much volatility. So this range in between 20 and 25, you will see big moves, and you can see big moves on regular basis. So we have to see either it will go beyond or surpasses 25, or it will fall below 20. Okay. So apart from that, the natural gas started rising again. We will see. I haven't discussed for the last 1.5 or 2 months, because the prices start falling. But now, because we have officially entered into the winter season, I have to reanalyze it again, because that's where you can get the gist of the price movement for natural gas. Okay. And last week the entire treasury section, the yield section, was down and out, and this week it closed in green, somewhere in green. So again it started moving higher. And one thing is very very clear. One thing is very clear. As you can see, the 3-month yield, which is at 4.2%, and the 30-year yield, which is 3.9%. So this is a classical flatness or inverted yield curve. I will show it to you. This is a classical inverted yield curve, and it indicates recession. How much fall you can see in the stock market? I have said this thing in my previous videos of USA Weekly Market Report series. You can probably go and check it out, and if you are a regular viewer, you would have already watched that video. I hope you do. So I don't want to talk about stock market movement, because in the two prior instances we have big falls in the stock market movement in 2000 and 2007-8, but this time things are completely different. Okay, this time in those two instances we don't have QE, and we don't have central bank jumping into the market, but after 2008 things have changed completely. But still this is an inverted yield curve, and I'll show it to you. Then we have US dollar index. It looks like the trades on the higher side are now getting reduced significantly, and that's where we have seen from 115 to 106.97, and it's obviously it went down to 105.34. From there it's been a rise of 1.5 points, but overall this is down and out. We will discuss about all of it, but first let me show you the yield curve. This is very important. These are very simple, but very I would say important tools. As you can see, this is the inverted yield curve, and now you can see it simply means, the interest rate for the short term bonds are higher than the interest rate of long term bonds, which simply means that people or investor sees much more uncertainty compared to the long term in the long term. And when you have lots of uncertainties in the short term, people or investor demand more return in terms comparably when the things are certain or when the situation is certain. Right now in the short term, investors are thinking that situation is uncertain, and they require more return. Okay, that's the basic understanding we have here, and what we can clearly see that the yield curve has happened like that once in 2000 and once in 2007. If you directly correlate, then one should expect a 50-60% fall, but things will not go like that. This recession comes with inflation, so that's the situation where the companies will definitely cut their cost. At the same time, when you have high inflation, so they can raise their services or raise the prices for their products and services. So there will be situations where you have to analyze that particular situation, and rather comparing the previous instances and directly correlate with the current scenario. If it plays out like this, that's a different thing, but this time situation is completely different. Anyways, let's go and analyze the chart. I will start analyzing with natural gas, okay, because this is not only related to stock market, but this is also related to the the regular needs of the individual. And if you are living in the Western Hemisphere, obviously you are very much dependent on it in the winter season, which has already been started. So what we can see over here, this is the natural gas chart, natural gas futures chart, and technically this is a consolidation where you have big moves. Okay, and this is the upper end of the range, this is the upper end of the range, and this is the lower end of the range. Okay, so you can clearly see the moves, and now the trend is set. So you have any breakdown will happen below 5.4 and if it continues to sustain above 5.4, the natural gas will definitely move towards 9 or 9.8, or I would say in between, yes, 9 and 9.8. So be ready for that up move. This is going to be a big trade if this is the range, and the range is very clear. As you can see, the range is very clear, and how much time it will take, it will take definitely 56 or 60 days. So the scenario matches perfectly, because in the next 60 days we will see most of the European, US and other countries will be in will definitely enter into the winter season, and at the end of the December or in the first couple of weeks of January, a very good winter, I would suppose. Then obviously it will have an impact on natural gas, and the trend is saying the same thing. Now the next important thing is, and in terms of percentage, it is like 40 to 50%. So this is going to be a big one. I hope that things will start normalizes very soon. So this is the dollar index chart, and as you can see, there has been very sharp falls. So if you are looking at the short term trend, what we can see is a consolidation, and this consolidation is not positive. That's what you can take a breather. That's where you can take a breather. You can see this is a consolidation that's been happening after a big fall. So what do we have here? How do we understand this thing? So there is a consolidation. So if dollar index does not sustain above 107.4, and this is the current range, 105.89 and 107.4 on the upside. If it moves beyond 107.4, then the upside will resume again, but if it will consolidate in between this range, and once it started falling, let's say it will consolidate for the next 1 week, and then it will start falling again. The moves that we can see, what we will get over here is something like this. So 1, 2, 3, and this is going to be 4, and then it is going to be 5. So it's going to be a big downside which is waiting for dollar index if the dollar index does not sustain above 107.4, or if it does not trade above 107.4. So there is a good chance of Santa rally in the month of December going forward. Okay, so this is what we have here. Now coming to the indices, the first one will be Nasdaq Composite, and let me just show you what's been happening. So the last week was started with 14th, which was Monday, and ended with 18th, which was Friday. And this is this particular section is 14, and this is where we have ended in the last 1 week. And you can see for Nasdaq, it's a consolidation. It's not only for Nasdaq but for Dow Jones and SPX. Consolidation has happened. So what we can expect over here is, for Nasdaq we will wait. This is the specific range in between which Nasdaq has been trading. So we have to wait for the Nasdaq, number one, not to go below 11,000, and we will wait for the Nasdaq, number two, to surpass 11,240. Once it surpasses 11,240, the range for the swing for 12,000 or 12,300 will open up. Okay, so this is what you need to look at. Talking about Dow Jones has a different price movement, because let me show it to you. As you can clearly see, this is very near to its previous resistance. So there is a limited room for Dow Jones. That does not mean that the Dow Jones cannot cross its previous resistance. That simply means that Now is the time when we can see the dollar index is giving an indication of a big downside, obviously after some more consolidation. Right now for Dow Jones, this is the range, so the Dow Jones must not fall below 33,300, but at the same time for an upside it has to surpass 34,300 or 310. Okay, so this is the range. This is an wait and watch game. For Nasdaq it is much more positive compared to Dow Jones, and if let's say Dow Jones surpasses 33,300 and 310, the range for 35,000, then 35,700, or even 36,000, 36,500 will open up. So this is also Dow Jones is also on the verge of a breakout, but because it is very near to the resistance and we have seen a very sharp move, so a correction or consolidation in the short term is not at all a bad thing. Now talking about SPX, which is a much more I would say stable one. This is the range. I was already doing something, and that's where you can see all these lines. And for it is not at all correlated with I mean in terms of looks Nasdaq, but yeah, the headspace is there. So on the downside for SPX you have 3,900 and 3,889, and on the upside we have 4,021 and 4,030. Once S&P 500 crosses 4,030, so the way for 4,300 will open up. So after 4,030, a 7 or 8% move will happen, or will definitely happen on S&P 500. So you can see there are different things happening in the market. You cannot be so much sure about each and everything. If you are thinking that stock market will fall, they are not. If you are thinking that recession, inflation is high, at the same time we have recession. If you are thinking that commodity prices will start falling, now we can see natural gas will start moving up because of different trade scenarios, or whether it is a demand or supply, we don't know, but there are big number of trades that is surely be taken, and that's why we have seen the big change in price. So there are n number of things that's been happening in the stock market, and that will have an impact. But if you really want to make money, you have to keep yourself calm and stay invested in good stock over a period of time, and that's where the sanity lies. And as far as the trend is concerned, there is nothing which is saying that the trend is negative or the stock market is ready to fall down big time. There is no indications like that as far as the price movement is concerned. And because we are analyzing the Wall Street or the US indices on weekly basis, so our intention or our goal is to focus on the next or upcoming 5 days, and we have seen consolidation for the last 5 days. Hopefully if the dollar index will consolidate for one more week, we will have one more week of consolidation, excluding some individual stocks which will perform well. But once the dollar index started falling again, you will see big moves, and then you will see broad moves. Now the moves are specific to some limited stocks, but it is not going down to each and every nook and corner. But if the dollar index falls below a certain point, you will see huge moves on the broader market. So with this positive news, this is the end of the video. Thanks for watching.